Welcome to Signal Stock. On Tuesday, IBM had the worst day in its history. $67 billion of value disappeared in one session, from a company that is famously boring. This video is about why that happened, and about the strange fact buried underneath it. The thing that destroyed IBM should have been a gift to another company on this board. That company fell too. Let us break it down. First, the accountability check. 27 forecasts confirmed. Everyone moved in the direction we called. 20 of 27 landed inside their full range, and every single range miss happened in the first 2 weeks, before we started sizing our targets to each stock's own volatility. Since that fix, 11 for 11. Here is the board, and it is entirely red. 7 stocks, 3 sectors, and 1 cause. 3 forces landed in the same week. Investors started openly questioning whether the enormous sums being spent on artificial intelligence can justify what these companies are valued at. The Federal Reserve signaled it intends to raise interest rates this year to deal with stubborn inflation, a hike, not a cut, which reprices every expensive growth stock in the market. And oil spiked after a blockade was reinstated on Iranian shipping through the Strait of Hormuz. A note for the more active traders. Look at AMD. It has by far the highest valuation multiple on this board, and the highest momentum reading, which means it has fallen the least and has the furthest left to fall. In a rising rate environment, that combination is exactly what gets sold first. Now, IBM. The miss itself was almost trivial. Revenue came in around 3.5% short. That does not cost you a quarter of your company. What broke the stock was the reason. In the final weeks of June, IBM's customers took the money they had set aside for IBM's software and its mainframes, and they spent it on servers and memory chips instead. They were racing to lock in hardware before the memory shortage pushed prices higher. IBM did not see it coming. Chief Executive Arvind Krishna wrote a letter to investors, unusual in itself, and said the company had faltered. That word did as much damage as the numbers. And notice the shape of it. IBM released these figures 8 days before its scheduled report. Nobody made them. That is a company that knew it could not wait. A note for the intermediate traders watching. The real event has not happened yet. IBM's actual earnings call is 5 days away, and the letter deliberately withheld the full-year outlook. Nobody has seen guidance. Bank of America expects that guidance to be cut, particularly in software. So yes, the stock looks cheap now against its own 5-year history. But it is cheap ahead of the number that broke it, not after. Momentum is not even oversold yet. That is a reason to wait, not a reason to catch it. Now put these 2 slides side by side, because this is the part that should make you stop. IBM lost a quarter of its value because its customers stopped buying IBM and went to buy memory chips. Micron makes memory chips. Micron fell almost 13% in the same week. Nothing about the shortage changed. 3 companies control over 95% of the world's memory supply, and they have redirected their factories toward the high-margin chips that AI systems need. Data centers now consume roughly 70% of all the memory made on Earth. Prices rose 80 to 90% in a single quarter. New capacity does not arrive until 2027 at the earliest. Micron sits at the center of all of that, with real pricing power, and this week, for the first time in this series, its valuation multiple fell below its own sector benchmark. The company at the center of the shortage is now cheaper than the sector it dominates. So why is it a hold and not a buy? Because momentum is nowhere near oversold. The market is not finished selling this trade, and being early is indistinguishable from being wrong while it is happening. We want it on the longer horizons. We are not catching it here. So, to close, our standout call this week is nothing. There is no buy on this board. Every short-term signal is hold, and the only name we want on a longer horizon is Micron, and even there, we are waiting. That is not us being coy. It is what happens when a market stops reading balance sheets and starts repricing an entire theme at once. When everything falls together, the useful question is not which company has the best story. All of these have stories. The question is which one the market has stopped listening to for reasons that will not last. On this board, Micron is the only name where the numbers and the price have genuinely parted company. Everything else is being sold for reasons that are, at least for now, real. If this was useful, subscribe and hit the bell.